High yield usually means high risk, but what if you approach it as a disciplined experiment? I'm building a high yield dividend portfolio with limited capital and a clear goal of $100 per month in after-tax income. Today, I'll show you how it's performing so far, what's working and whether the risk is actually worth it. Welcome back everyone, I'm the Swedish dividend investor. So, for today, we will go through my high yield portfolio. For newer viewers, this is a portfolio I started, separated from my main portfolio, to see how a high yield portfolio would perform over time. The focus of the portfolio is to have a yield on cost of over 10% pre-tax. I do disclose my after-tax income in this portfolio as well. The goal with the portfolio is to buy around 8 positions to get an average after-tax income of over $100 per month and then stop adding new capital, only to reinvest and see how it performs over a long period of time. So, the portfolio ended the year being 3.7% in the green. This is the total return. Now, I'm pretty happy with that, since I started the portfolio in late August. I've linked the video when I started this portfolio. Before the year ended, I added 2 positions. One is not new in that sense, since I held them in my regular portfolio before, that being Pennant Park Floating Rate, ticker PFLT. I sold my entire position and moved the money and some new capital to my high yield portfolio. I have 170 shares bought at $9.53, so in total $1,600 roughly. They pay monthly dividends and the annual dividend is $1.23 per share, or $209.10 in total. My yield on cost is 12.91%. Heading over to my dividend calendar, where I plot out the payments and remove the tax of 15%. We can see PFLT is paying me $14.81 per month. That's pretty sweet. The latest addition is Starwood Property Trust, STWD. I'm not done buying this one, but my initial position is 74 shares bought at $18.49. So the total investment is a bit under $1,400. I would like every position to be around $1,700 to $1,800. So about $300 to $400 more into STW. They pay quarterly in January, April, May and October. Their annual dividend per share is $1.92, giving a total dividend of $142.08 and a yield on cost of 10.38%. Checking the calendar, we can see STWD is paying me about $30.19 per quarter. Moving over to dividends received for 2025. Now, like I said before, it's a newish portfolio, so I only have dividends from October to December. $42.73 in October from OBDC and Capital Southwest. $45.22 from Gladstone, Hercules Capital and Capital Southwest in November, and $25.26 from Gladstone and Capital Southwest in December, for a yearly total of $113.21. Not too shabby, I would say. Moving over to the main page and scrolling down a bit, we can see my income stats. We already know the total for 2025, but let's look forward a bit. The forward pre-tax income for 2026 is sitting at $1,018.64. That's $84.89 on average per month, or $19.59 weekly, $2.79 daily, as in every day of the year, or $0.12 per hour every hour of every day. Remember, this is before taxes. We can also see the calendar. My after-tax income for now is $865.85 per year, or $72.15 on average per month. Aiming for that $100 per month in after-tax income, and we're not that far off. I think I will be able to hit it before the summer. Quick reminder, if you enjoy transparent dividend content like this and want to follow this experiment over time, hitting the like button really helps the video reach more people. And if you're new here, consider subscribing. we're less than 100 subscribers away from 1000, and I would love to hit that milestone together before January is over. I also want your input, whether I should stop adding capital once I reach the goal of $100 per month, or if I should be flexible and add income when the opportunity comes around. Let me know in the comments. So I also added a tab, Potential Buys. Let's check it out. Now, I won't do a deep dive in this video, but I have some candidates for the high yield portfolio. First out is Morgan Stanley Direct Lending, MSDL. It's a pretty new BDC with a yield of over 12%. I do think it's a bit risky getting into new BDCs, because I like seeing a track record. I wrote price/MOS, that stands for margin of safety. So the price to the left is the current price and the price to the right is the target price. It's the same with dividend and yield. I wrote cut. If they were to cut the dividend and if we buy at the target margin of safety price, we can see the potential yield. Now, if we buy at $15.5 and they don't cut the dividend, even better. A good thing about BDCs is that they have to pay out 90% of the distributable income in dividends. So, most likely they won't stop paying entirely. And it's always good to have a bit of a margin of safety. We also have Blackstone Secured Lending, BXSL, currently yielding over 11.5%. I've talked about this one briefly in another video. And it's also a pretty new BDC, with their first payout being in January of 2022. They have hiked their dividend since then. I would like to buy it at around $25. The next one is Ares Capital, ARCC. I own it in my main portfolio, but I can't add to that position due to my broker stopping trading with BDCs. Thanks EU. It's a bit overpriced currently. But in November, they got down to below $19 in share price, offering a 10% yield. They have a great track record and is the largest traded BDC. I don't mind owning it in two different portfolios, but I do want to have an entry price of below $19 for that 10% yield. Next one is JEPQ. Honestly, I did want to have an ETF, Rex Tech Innovation Income and Growth ETF, ticker ASWL or FEGI. Euro adjusted, they pay around 3.09 euros per share and year, at least going with the average distribution. With a price of 23.5 euros, that's a yield of just above 13%. Their share price has held up pretty good, but I don't have access to it via the broker I use for the high yield portfolio, so I can't really go with that one yet. Hopefully they will add it, and if they do, I will add it to this portfolio. But as you can see, I've gone with JEPQ. I euro adjusted the distributions here as well, and the current yield based on the latest 12 payments is sitting at 10.3%. I could also go for QYLE or Global X Nasdaq 100 Covered Call ETF. I would want one high yield ETF in this portfolio to diversify away from the finance sector. I am in no rush to add one, and I still have to complete my positions in STWD and HTGC, and along the way I could buy any of the BDCs listed here. But I also want to hear from you. Do you want me to add energy stocks as well? Or should I just super concentrate on the BDC and covered call ETF? So let's quickly summarize where the portfolio stands right now. For 2025, the total return is 3.7%, and that's despite starting the portfolio late in the year. We're currently holding 6 positions. And so far, the portfolio has generated $113.21 in after-tax income. And looking forward, the projected pre-tax income is $1,018.64 per year, or $865.85 after tax. Coming back to the question from the beginning, can you build high yield income without taking excessive risk? It's still early, but so far, this experiment is doing exactly what it's supposed to do. Overall, I'm happy with how this portfolio is developing. The income is building the way I hoped, predictably and without doing anything reckless. Over the next few months, the focus will be on finishing positions, staying patient and letting the dividends do their thing. But guys, that's it for this one. Just a quick update and some plans going forward. I hope you enjoyed it. I will see you guys next week. Until then, I'm the Swedish dividend investor. Stay smart, stay patient and keep stacking those dividends. Ha det gött!